Hello, and welcome to another episode of Talks with the Tax Cop. For those that are watching on YouTube, thank you. For those who did not even know we had a YouTube channel, y'all, we got one. Y'all get to see some of the stuff I'm putting up on the screen, using my Ecamm Live software, learning how to be my own studio production person. Sometimes it's challenging, sometimes it's not. Just wanted to let you know that we do have that. And if anybody's interested in learning more about Ecamm Live, like what is she really doing? Go on and hit my link, and then you can get a 14-day trial and figure out exactly what I'm talking about. For those who got Macs, because it's on Mac Apple University, right? Apple World, Apple Sphere. Y'all, and for those who don't know, all my stuff is Apple except for my phone. I'm team Samsung, team Android all the way, y'all. When it comes to the phone, I do have an iPod, I do have an iPad, like everything else. Because anybody else listening is like, this chick need to switch over. For those of y'all who know me, I'm not switching. I'm not switching the phone. I'm gonna make the phone do what it do, how I do, because I like that. All right. So today's episode, we are going to talk about, gross income. Like, I really need to break some things down. I got a couple of calls. I got a couple of questions that are happening in tax season right now. People are asking me questions. The stuff about, hey, Cash App and Venmo and all these things are coming back up. So I want to take this episode to kind of, let's do some educating, right? And not just by my definitions, but let's go to IRS publications, get the definition. Let's break this thing down. Let's read it. Let's analyze it so that we aren't speculating and we truly are understanding what it means when we are talking about what's gross income versus, and then I'll break this down into like a series of things, right? So it'll teach you really how to understand the tax return, what you need to be aware of, because the truth of the matter is, y'all come closer. You're not being taxed on your gross income, right? So there's other nuances that are happening, but you really are not paying tax on gross income. But I need you to know what gross income is. Not because I feel like it's the most important number when it comes to the tax return, because I don't. Like, anybody who works with me knows I feel like the queen of the return, and I do call her the queen of the return, is the adjusted gross income. I feel like that is the most important number on the tax return. She is the decision maker. She is the head of the household. She runs things. But we can never even get to adjusted gross income if we don't know what gross income is. All right? So today's episode, that's what we're going to focus on. So let's just jump right in. I'm going to share my screen for those who are, I move that fast, right? I'm going to take this off. Y'all, I'm learning. Y'all are like, ooh, let me take you back to the right screen. This is why I need some more help. I'm learning, y'all. I got some classes I'm going to take. Anybody who's watching me, like, work on them transitions. That's comments. I do need to work on the transitions so that I can get to be better. All right, so we're going to go through this. This is from Revenue Ruling 2007-19. This has come up more than once, but this is the most recent one, the one I found, me being lazy using Dr. Google. This is the most recent one, but I'm sure this will come up and has been in a revenue ruling since 2007. But we're going to break this down. For those, I'm going to see if I can make this a little bit bigger. Just for my eyes. There we go. Because, you know, I got to wear these glasses. All right, so here we go. On the screen, sharing it with you all. All right, Section 6.1, gross income defined. This is for compensation for services, including fees, commissions, and similar items. All right, so this is your money coming in, right, into your household. Yes, you're talking W-2 and any of your small business owners who also have 1099 income. You get cash, like any income, because I want you to understand what this is saying. All right, so we're going to read this. The purpose of this revenue ruling was the Internal Revenue Service is aware that some taxpayers are attempting to reduce or eliminate their federal income tax liability by claiming that compensation received in exchange for personal services is not taxable income. These taxpayers often attempt to avoid their federal income tax liability by failing to file federal income taxes or by failing to report all, and that should have been bold, all income from wages or other compensation on their federal income tax return. They often furnish Forms W-4, employee withholding allowance certificates on which they claim excessive withholding allowances or claim complete exemption for withholding. In addition, they often claim deductions from gross income for personal, living, and family expenditures in order to reduce the tax liability related to wages or other compensation. All right? So the Internal Revenue Service know that people want to reduce their federal income tax liability. Nobody want to pay more tax than they need to. Nobody. And I'm not here to say you should pay more tax than you are rightfully due to pay. The tax system is a voluntary system. However, I want us to be mindful. I left it on the screen instead of y'all looking at me so that you could understand really what's going on here and understand, hey, the IRS not dumb. They not dumb. They know you want to reduce your tax liability. However, we need to do this legally. But you got to start somewhere, okay? So, I'm going to go into where we can get to the issue, okay? Whether taxpayer A may avoid federal income tax liability by maintaining that the Internal Revenue Code does not tax wages or other compensation received in exchange for personal services. So anybody's out here, y'all are like, wait a minute, I understand for business services, if I'm doing all this stuff, that's what this revenue rule was for. I'm going to go find it, the definition. Okay, so if I get taxed on wages, I know that. If I'm getting a W-2, I know that. If I get a 1099, I know that. If I'm getting money any other way, right? So money received in exchange for personal labor constitutes an equal non-taxable exchange of property, right? So these are the arguments. Taxable income from wages or other compensation for personal services can only be determined after deduction of the cost of providing the labor. So people are saying, wait a minute. Yeah, I've done the work. I got the money, but I also got some things I get to deduct. And so therefore, my taxable income, which is what I told y'all, right? What you're not getting taxed on a gross income, you got some deductions you get to have, especially as a small business owner, before we determine really what their taxable portion is. Okay? We go into some case law here. I'm looking for the IRS definition. Wages fall within the definition of income set forth in Section 61A1 of the Internal Revenue Code. So this is U.S. Code 61A1 defines it. And we're going to pull up Revenue Code in a moment. Taxpayer A wages and other compensations for services are income subject to federal income tax and must be reported on taxpayers A federal income tax return. This is what they're saying. The payment of wages and other compensation for personal services is not an equal exchange of property. The full amount of wages received by taxpayer A is subject to federal income tax and must be reported on taxpayer A's federal income tax return. Wages and other compensation received by taxpayer in exchange for personal services are subject to federal income tax without reductions of taxpayer A's personal living expenses. So you got to start somewhere. What the IRS is essentially saying is, I need to know all your gross income per the definition of Section 61A1. You can't just be out here doing what you want to do, but you need to at least tell us all of the income that you receive before we even start talking about deductions and determining what you're going to be taxed on. You can't just get the money, right? Then report all the expenses and then tell us that gross income is that net after expenses. If y'all pay attention to anybody who's filling out a Schedule C, we talked about Schedule C a little bit last week, right? You have to report gross sales, gross receipts, gross wages. Then you have to identify what those deductions were. what those business expenses were. The same thing happens on an 1120, that's the corporation return. The same thing happens on the 1120S and a partnership return. You first have got to tell the IRS how much money you made in totality throughout the year before you ever get to show them what you're taking as business expenses. Okay? I'm going to come back on the screen so y'all can see my face and understand what's going on. Like, I done got my arms and everything all involved in it, so y'all truly understand what is happening here. Okay, now we'll use some examples, because this is the whole issue with Venmo, Cash App, and other scenarios like this. We know that people would, I'm gonna use PayPal because PayPal is the oldest thing that I'm familiar with, right? So let's be mindful that PayPal, Cash App, etc. already have their merchant service accounts, right? They already have prominent merchant service accounts associated with them. So PayPal and Venmo, I think, are together. Square and Cash App are together, right? You already have credit card processing or merchant servicing processing services, centers that already have to report stuff. So anytime you swipe a credit card, a 1099K, right, for those business owners, those 1099K is capturing those transactions, because the credit card companies, those merchant service companies, are required to report that information, aka they snitching on you, right? They snitching on you because you got a merchant service account, and this how many times you swiped the card, this how many times you did it, this how many transactions, this the month. Y'all pay attention to a 1099K, how much money came through there, etc. Total. Not talking about fees, in total, right? So what's happening is, y'all know, when we are using personal PayPal, personal Cash App, because there are business Venmo, there are business Cash App, there are business PayPal. When you're using the personal side of these services, what is happening is, y'all know, with PayPal back in the day, it would be, hey, it was a quick way to get money between your friends. You go out to dinner, they pick up the bill, you want to pay them back because you don't got no cash on hand, you left your card in the car, whatever. Here, I ain't got no money, let me re-up. Let me take care of you, right? So we would say friends and family, versus what we know to do when we are out here providing services. Y'all just say personal services. Y'all doing something in exchange. You're doing a financial transaction in exchange for something, currency, right? We in a marketplace. I exchange a service in exchange for compensation, right? And then what we want to say is, oh, that was friends and family, like I'm loaning you money. And they're like, y'all set out from that revenue ruling back in 2007. Hey, y'all need to cut this stuff out. It's a lot of people who are trying to do workarounds because they don't want to report all the income and they don't want to get fees taken out. I want to change our mindset. Fees are a cost of doing business. It really is. And if you don't have a lot of overhead, fees are a viable business expense that you want to consider. Now, if you want to pass that fee on to the client, because it's cases where you can actually pass that credit card fee on to the client, let me tell y'all something. That fee still getting paid, but when the money come to you to pay the fee, that's income. That is it. So now you try to avoid making income, massive income. You didn't give yourself more income when you decide that they got to pay the credit card fee, because the fee got to get paid. They paying you, it's income to you, because you getting that and then something, you got to turn around and pay it. All right, so let's be mindful of what we're doing. It's the cost of doing business. Now, I know what a lot of people will say is fine, Patrice. Fine, Miss Tax Cop. What I'm going to do is I'm going to avoid that altogether, and they're going to give me cash, or they're going to give me Bitcoin, or they're going to give me whatever. They tracing Bitcoin, they tracing virtual currency as well, right? Because it's a transaction. It's about the audit trail. Cash is a little bit harder to track. So I'm not telling you to avoid it by doing it. I'm saying be mindful, because cash going to eventually go away, y'all. They working on being able to know what's going on. They done made a whole bunch of, put a whole bunch of currency out here, right? Fiat money out here, and somebody got to pay for it. That's where taxes come in. We got to pay for that. Like y'all know, we got crazy tail deficits as a country. We got to pay it back some way, and that's where taxes come into play. They want to know how much money, they being the federal government, wants to rightfully know how much money. But the beauty behind the tax system is it's a voluntary reporting system based on some people dry snitching on you. Okay? So yes, your W-2 is a dry snitch. Your 1099-K is a dry snitch. Your 1099 NEC, they all dry snitches. Right? And so when you don't put that same amount up there and they go into the computer system and it don't match, they say, ooh, you trying to avoid paying tax. I understand you trying to reduce your tax liability, but you trying to avoid doing some stuff that you probably should not try to avoid doing. It's not a good look for you, boo. It's not a good look. Okay? So when we are out here and we're doing we call it side hustles or side businesses until it become our full-time hustle, or even if it is our full-time hustle, we trying to cut corners by being like, hey, give me this, give me that, or say it's friends and family, don't put goods and services because I want all my money. You actually could be hurting yourself. The reason why I say you actually could be hurting yourself is not necessarily from a reporting stance, but from a business infrastructure stance. Now, I'm gonna break this down for you. The tax code truly is beneficial to businesses and investors, right? That's real estate investors, people investing in businesses, people investing in the stock market. Like, that's who the code is built for. That's like where you get all of your loopholes. When you shortchange yourself by saying, I don't want to take fees, I don't want to do this, I don't want to do that, right? And then y'all are saying, but I want to write off everything, which is marketing, right? You're hurting yourself because truly, we've talked about expenses. You've heard me say this before. With good record keeping, you can rightfully deduct business expenses that are associated with your business. The definition for that is they're looking for anything that's ordinary and necessary to the operation of your business. Fees are ordinary and necessary to the operation of businesses. Sales tax, tax preparation, consulting, training, software, etc. are ordinary expenses in the running of a business. Why would you hurt yourself? I know when we first started out, it's rough. But why would you hurt yourself by not allowing things to be done in a proper manner and create and keep track of those expenses? I know you want all your coins. I know you want all your monies. I do. I 100% get it. I run a firm. It is a business, right? Where we are giving off accounting and tax services. Yes, I want all my monies so I can pay my people and make sure that everything runs smoothly. However, I don't mind the fees, especially because my overhead is not as high as it could be, right? I don't have a massive printing operation or anything like that. I have ink and stuff like that, but I'm not constantly printing stuff. And so I'm very mindful and say that's the cost of doing business. I'm still getting some money. They ain't taking all the money, but I don't pass that on to me. I just am like, that's the fee. This the price. I factor in the fee in it. I understand. I'm walking away with this. It's good to go. And I'm not going to tell anybody how to run their business. I just want us to think about how we're operating in this space with this information. You don't want to, what's the saying? Cut off your nose to spite your face. You really want to be able to handle and understand what you're doing in this space. So just something to think about. I'm over here getting us the U.S. code definition. Y'all hear me typing because I didn't have it already queued up. I'm learning. I'm learning. All right. So we're gonna go to the US code. I'm gonna share my screen with you all. Share screen. All right. I know that's tiny, and y'all see more of them advertisements than anything else. I am on Dr. Google. I'm gonna see if I don't have my trackpad to make this bigger. Y'all, me and this mouse, and I'm not the best at, like, how do you make the thing bigger? Oh, here we go. My zoom. Can y'all see that now? That sounds so country. All right, here we go. All right, so this is Cornell Law School. I could have went and pulled it up from the tax book, which is a great resource that I use. I absolutely love the tax book, and actually gone to the definition that way. Next time, I will go about it that way. But here we go, the general definition. U.S. Code 61, remember I told you, 61(1)(a) is the definition of gross income. This is the IRS code. U.S. Code 26, Section 61 says the general definition for gross income, except as otherwise provided in this subtitle, gross income means all income from whatever source derived. Now let me tell y'all, I'm gonna stop right here. Anybody who is an accountant and you take your federal income tax class, this is the this definition stick with you like ain't nobody business, right? Even though I audited and did all kinds of things for my career in the federal government, this definition, like, I sleep with this definition. This thing still from college hit me so hard because that any source derived, any source derived, okay? Including but not limited to the following. This is what their revenue rule was on. Compensation for services, including fees, commissions, fringe benefits, and similar items. That's where I was showing y'all, like, you getting services and, compensations for, you made a basket for somebody, or, right, including fees. This is why I stopped and said, hey, y'all, when y'all pass some fees on to y'all, so it's income. It's income. Gross income derived from business, not net, gross. The money that first came in the door. Gains derived from dealings in property, interest, rents. So all my people who got rental income, and you might not have people on an official lease, y'all get that's income to you. It's supposed to be reported. Rents, royalties, dividends. Now, a lot of times, depending on if you're working with a third party, like a property management or something like this, you're going to get a 1099 miscellaneous for rent. You're going to get a 1099 INT. That's what I'm telling you. They dry snitching. 1099 INT. You're going to get a 1099 miscellaneous with box 1 completed. Royalties. You're going to get a 1099. What is that? A 1099 miscellaneous. Normally that's box 3. Box 3? Yeah, box 3. Or box 2. Trying to remember the stuff without looking at the forms. Dividends, a 1099 div, or your 1099B is going to be broken down. Annuities, that's on a 1099R, right? These are information return. That's what that 1099 stands for, y'all. They dry snitching because it comes to you as a taxpayer, but it's also being reported to the IRS because they don't trust us. They don't trust us to tell the complete truth, right? Income from life insurance and endowment contracts, pensions, this is like stuff on 1099Rs. Income from discharge of indebtedness, that's a 1099C. So if anybody ever got that, 1099C. A distributive share of partnership gross income, that's a K1. Income and respective of decedent, and income from interest in an estate or trust. A lot of times you get that information from like on a K1 or a different type of return, okay? Y'all, not my definition. This is the IRS tax code definition. We've got to pay attention to this stuff. And we've got to understand that you got to report it all. This is part of your tax process because it is the start of the tax return. It's all in. So you have like from line 1 to like line 8 or 11, depending on how they change the return, right? So anywhere from 8 to 11, right? You are reporting all your income. So you'll get total income before you ever get to adjusted gross income. Pay attention to your 1040. They want to know all the income that you got from wherever it came from. A 1099-G, if you got if you itemized in the previous year and you got a state refund, all of it. You've got to tell it. They know a considerable amount of it. The one they really don't know that much about, I'm going to share the screen again, is this one. 1 and 2 are the ones that get questionable, right? Because unless you got a 1099K or something of that nature, that's really, really hard to depict. So 1 and 2, and that's why you saw the revenue ruling for compensation for services, including fees, commissions, fringe benefits, similar items. Some of that stuff is on the W-2. Some of it's not reported. Some of that stuff you just get, right? 1 and 2 are some of the hardest things really to pinpoint sometimes, or where it get gray because you don't want to tell it all. And they're telling you, you need to tell it all. You need to tell it all because a majority of it we know. All right, so I just wanted to stop there. Like, we're going to go into the series. I'm going to do a great job of breaking this down and teaching you all what's going on the tax return itself. Educating and spending time in these series to break out the big components of a 1040, because most of y'all are 1040, and how y'all stuff as small business owners roll into the 1040. Right? Because that's a lot of y'all, that's where y'all paying taxes at. A lot of my S corporations, my partnerships, you're rolling into that section. And then we will then go into some other series that gets more into, okay, so now you know how this is filled out. You know what your information is. And now let's talk a little bit deeper. What happens now if I get some IRS notices? Or what happens when I need help because the state is asking me questions, or I didn't report all of this information, and now I'm getting notices. What do I do? That's the wonderful thing of being able to not only understand like how audits work, but also understand how taxes are prepped, and then even more how to solve tax problems when those notices start to come, and what that feels like, and the things and the remedies that are available to you and afforded to each one of you all as taxpayers. We'll go through the Taxpayer Bill of Rights. We'll go through what steps you need to take, some things you need to handle and be aware of yourself as the taxpayer, when to bring in a tax professional to help because now it's gotten too big for you to be able to handle, or just the stress is too overwhelming. We will do this series where I break it down for you, and we'll talk about a different topic each time when it's just me talks with the tax cop, right? So that y'all really, really get it. We understand what's going on, and it'll allow you to have better conversations with your tax pro. And if you don't have a tax pro that you're working with, know that at my firm, Total Tax Experience, we would love to have you come on. Even if you did not come on as a client, be aware. We will be launching some things later on this year, so you can be able to ask some questions to an accountant that make it accessible for your situation, and have a community environment to be able to do those things. So I wanted to thank you all for joining me for this episode. Those that are listening online, those who are actually watching, leave a comment on YouTube. Tell us what you like. Tell us what you want more of. If you have a guest that you would like us to be able to reach out to and get a little bit more insight, if there's a particular industry that you have questions about, we are here to be able to serve you all and break this stuff down so that it's palatable, right? Because I tell everybody, taxes are addition, subtraction, multiplication, and division. That's it. Taxes are just addition, subtraction, multiplication, and division. The whole deal is knowing where everything resides on a tax return. That's what makes a big difference for anybody and everyone. Once you know that, you can be more in control of your situation and feel like taxes aren't happening to you, that you have control and that you are dealing with this situation with the education, the empowerment, the knowledge you need to press forward. All right, so that's another episode of Talks with the Tax Cop. This week, season 2, y'all. I'm doing pretty good at being consistent. Shout out your girl. Boop, 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 boop. Like, I actually got sound. Let me do a sound effect real quick. Your girl. Y'all, we gonna do it one more again. We doing stuff. I'm learning to get a little bit better. My daughter over here, like, really, Ma, you doing too much. You doing too much. Y'all hear? She done stepped into the studio, jacking some stuff up. That's what I got for you all today. Looking forward to talking to y'all in a week when we take you down. So gross income, total income was our first line item. Next week, we're going to talk about adjusted gross income, break that down, and then we will go into taxable income, and then we'll hit the end with credits and stuff like that. All right? And then we're going to get some more guests on here. I know y'all like those guest conversations. I like those too. So I love interviewing people. It takes me back to my auditing days. And so we'll make sure that happens as well. All right? Talk to y'all soon. Peace.